This is the video for Friday, January the 22nd. You can see that the advancers and decliners were pretty even though the Dow was down overall. The NASDAQ was up, and it's thanks to Apple. Apple had a tremendous day. You can see the banks were a little bit red. The S&P was down, so all of the indexes sort of dropped towards the end of the day. Now the McClellan oscillator didn't do anything. It went from minus 24 to minus 25. So let's look at the all-important charts. Now the S&P, there's two moving averages in here, and I'm going to talk about those in a second. But look at the Fibonacci that I've been playing with. It's this yellow line here, and I've taken this extreme low with this average high. Rather than take this one, the fact that it didn't come up and make a second exact double top right here, the fact that it came down here might indicate that that's the point. And you can see that it's sort of right around this open and this open. And that's where the sellers were to drive the market down. But look how well the Fibonacci's fit now, 78.6. Look at all the times it touched 78.6, right here, 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 and here. There's a gap right at the 50%. So I think that's a good Fibonacci. What it's telling us is that it could be heading to 4068, but let's take a 127.2 and put that in there. And we may be heading first to 39.19 before we move back. But now let's look at these two moving averages. I've taken out all of the other typical moving averages that we see. And we've got the SMA, we've got an SMA and an EMA that I can play with. So I played with the SMA, and I tried to move that one around to try to get a good fit with a simple moving average. But I really couldn't find anything that suited my purposes as well as this EMA one did. So I'm going to get rid of the SMA, and let's just play with the EMA now. And the EMA, whether it's 8 or 11, probably doesn't matter all that much, but 11 seemed to be a remarkable fit. Look all the way around here where it's proved support and resistance, all the way back to, I mean, it's been a fairly good line for support and resistance all the way back to 2019. So even before that, the beginning of 2019, the price has pretty much followed an EMA 11. So let's keep our eye on this EMA 11 line, which tomorrow or Monday would be 38.06. And let's look for that for support. Let's put a little alert right there so that we remember. In fact, I'm going to take an indicator and I'm going to say the EMA 11 is going to be my indicator, my alert. And we're going to look at that when we come back Monday night. Let me just do a little bit here. And to remind us, we want to look at that. Now, Apple had a great day, moving up at over $1 in the after hours to finish at where? Double top. Now, I tweeted this morning that analysts are all calling Apple a buy going into earnings because it might be the first time a company has ever done $100 billion in a quarter. That's what the analysts are calling for. However, we don't see any RSI bars that show that Apple is exceeding the relative strength index of the market. And we do see a double top. Now the earnings are Wednesday. A pullback to the 8 EMA, which is also the 20 SMA, right in here, would be pretty welcome. I think there's going to be good earnings. I am still short the February monthly 130 puts. I've got 3 of them. I'd like to have 5 going into earnings, but the volatility on this week's earnings is going to move up right up until midday on Wednesday. So probably Wednesday I'll pull the trigger and look at how rich the volatility is and maybe take 2 short puts for the week and leave my February short puts, which are right now about 55 to 60% profit. I may take that profit. I may pile it all into long calls. Now, long calls is better than short puts because you've got a defined loss. But if you want to earn Apple around 140, if you're happy with that, and it's a long-term investment, then sell a 140 put. You'll end up buying the stock at 140 if it fails to meet expectations by the expiration date. And you'll also get to keep the premium, which could be $7 to $10, meaning your cost would actually be around 133, 130. Z I got out of. And why? Because we don't see any relative strength bars that it's exceeding the market, and it just did this yesterday. So I had $600 profit in my 300 stocks. I got out. Square, I am still in. Remember that earlier in the week I rolled all of my short calls. We could very well be coming back to the 50. If we look at the 50, it's been support right back here. Was support here and then resistance. For 3 days it fell below the 50 and then took off again. The 50 has been pretty strong support in the past. You can see right in here it was support, and here it was support, and here. Anyways, looking at more recent time and also these Fibonacci's. Let's take a look at why we drew this Fibonacci. We did because, why did we? I'm not sure I like that Fibonacci. So let's bulldoze that one. And let's take a look at a different one. Let's take a look at a retracement that starts here and goes down to here. So we had a pullback to a minor Fibonacci. The 14.6 is also the 50. So let's look for that pullback to the 50, which is quite likely. If that happens, that means I just roll my calls into the following week again, because I've only got 500 shares. Can't remember. But anyhow, everything's covered with short calls. 240s, 242.5s, and 250s, which are February's. The others are this week, January 29th. So let's look for that pullback as an opportunity to roll again, but I'm staying long Square. NIO, I actually added another 500 shares, but sold the 60 calls for about $3, next week's 60 calls. I also rolled this week's 55s into next week, just picking up $1.20. But slow and steady is what I'm doing with NIO. And NIO, after this big RSI move here, has been nothing but slow and steady. So that's the way I'm playing it as well, with conservative covered calls. Now CVS, just failing to meet expectations. This RSI strength here just petered out. AT&T, let's look. Home Depot had a really strong day, but nothing like back in here last summer, end of last summer, when we had the RSI bars going in the right direction here. We don't see them here. We just see Home Depot acting between the 30 and the 70 RSI bars. Let's go and look at Caterpillar, pulling back to 161.8. Caterpillar is really a stock to be looked at for, when we get closer to infrastructure stock, as is the other stock we talked about, but we didn't look at carefully. It was URI, United Rentals. And United Rentals, company that rents heavy equipment for short terms to construction companies. If there's infrastructure, there'll be companies that are going to rent rather than buy. And so if you have Caterpillar and you have a rental company, you're pretty well covered for the infrastructure. I mean, you've got a good base there. So this is a bull pennant, and let's look for a break. So let's put an alert. when the price crosses the top wedge line, let's take a look at that. Plug is a new stock to take a look at. Plug, take a look at what they do. Look at their company reason for being. I don't really care. I just know that it's momentum stocking. You can tell that by these RSI bars here. We have a gap that isn't filled. We have another pennant there. So let's put another alert, and let's look at Plug as an opportunity. If it starts showing a break of the pennant, we're going to buy. If the RSI bars kick in, we're going to buy more, and we're going to wait for an opportunity to take short-term profits. It's reasonably priced at $65. Do we want to look at anything else? Let's look at VERU. Still hasn't broken out, but we do have an RSI bar here, so its relative strength was better than the market, so that's encouraging. But we're still keeping an eye on it. SONO continues to rocket, and talking about rocket, it continues to do nothing. So that's it for today. Let's just remember that the S&P now is coming into the most critical week for earnings. We have a lot of companies, Google, Amazon, Apple, I think Microsoft already had earnings, and IBM already had earnings. But this is another big week. It's the last big week for earnings. Caterpillar will be in there. AT&T will be in there. So take a look and see what the market thinks about this last week of earnings. I still think that the Biden economy is bullish. Janet Yellen should get it confirmed on Monday, and I think the market is going to really, really like that.